Welcome again. Let me do some introduction. I'm getting new students each and every day. So today this lesson is about the introduction to Forex because there are new students that want to get introduced to this market. So I know this is something that I have done before, but I will love to go in detail for the new students because we cannot give them analysis before we take them through the introduction. I will start by showing what we will cover in this introduction. First is market overview. That is the Forex market overview. Then we have trading strategies. We have trading tools, money management. Then we have hands-on trading using demo accounts. How you should begin trading Forex trading using a demo account. Then the last part we will look at any other incidentals. Okay, so we move forward. So this is another thing. So overview, we will find out what the market is, the participation and factors that are influencing the market, how currencies move and what influences such movements. Another thing is how tools are needed, what tools are needed. Another stuff that we are looking at in this course is the sign up for a demo account and put all that we have learned to use, how you should practice using demo account, not live account, not real account. The demo account is the virtual money that you put in your trading account to practice. It's not real money. So for those who ask, the amount that you need to learn Forex or start Forex trading is zero because the virtual money is free. What you need to do is to open an account. Okay, we move forward. We are here to determine if we can make money on Forex markets. So our goal here is to make money, not to show how much you know about Forex. If you are not making money by the end of the day, that means that you are not doing anything. You are not trading the market. The end goal is making money, not talking too much. Okay, so Forex market. What is Forex market? Forex is derived from foreign exchange market. This is unique because of its trading volume, the extreme liquidity of the market. This market is very liquid. When we say liquidity is also associated with the risk. You can gain a lot of money and again you can lose a lot of money. It's a very liquid market. It's again a very volatile market. It's a geographical dispersion. So this is a geographical dispersion. So the market is a geographically distributed. There are so many factors in the geography of Forex, or the demographics and everything. So there are currencies from each and every country that we use. We have USD, we have pound, we have euro. So it's a diverse market. It's a long trading hour, 24 hours. You have 24 hours for 5 days a week. So the market is not there weekends and it's not there on Saturdays. So it starts at midnight. The hour is there. Okay, you can see the hours that are displayed here. Okay. So from this hour up to this hour. Okay, that is from this on Saturday, and from this so on weekend market is not there. Okay, we have low margins of profit compared with the other market of fixed income. Okay, but profit can be high due to large trading volume. So once you increase the volume, the more the profit that you get. Volume is again what we will read as a lot size. So when I say lot size, know that that is the volume. Okay. We have another aspect that is the leverage. You have the leverage. The leverage. The leverage, that is what determines the profit that you get as per the movement of the market. So if the market has moved for a huge gap, if there is a huge movement in the market, that means that there is high profit margin when the leverage is high, and a low profit margin when the leverage is low. Okay. What is Forex? Forex is exchange of one currency for another. So we have the pairs. Currencies, the purpose of FX market is to facilitate trade and investment. The need for foreign exchange market arises because of presence of multifarious international currencies such as USD and pound sterling. Okay. So when you trade currencies, we trade we trade the pairs. So currencies are pairs like pound USD. So we have the base currency, and again we have the quote currency. So if the pairs are like this, let's say that this is USD, and this one is another thing like Japanese yen. So this is what we call the quote. The second one, this is the first one, is what we call the base. You can check. So yeah, now this is what I was saying, the example that I was giving. This is the base, this is the quote. This is the first one, the base currency. The second one is quote currency. The other one, this is base, this is quote. Okay. Forex. Okay, let us check this information. Is very important for a beginner. Okay, sorry. And now what's I'm calling you back. Just in a few. Okay, sorry for that. So in Forex, one buys or sells currencies, or one currency for another. So the currencies involved in any transaction from currency pair, e.g. USD, Euro USD, GBP USD, USD CHF. So so you buy when you are like you are buying this one, you are buying USD. When you are selling Euro. So there is something that we call PIP. PIP, when you are measuring your movement in the market, the PIP is what determines the distance that the market has covered since you placed your trade. So your profit will be determined by pips. So once you have many pips, you have covered many pips, you have captured many pips, that means that your profit will be high. So we will be also using a lot of terminologies like pip and whatever. This is the smallest domination of any currency in the FX market. This is 0.001 USD. Okay, that is the smallest. So we measure pips in the market. Long or short? What about if I tell you go long or go short? Okay, there is buy or sell. So long is buy, short is sell. In this case, you are a long if you are expecting the currency to go up. So there is this theory that says that if the currency, most of the currency pairs will go up for a very long time compared to the time it will go short, that is go down. So that's why down is called short. And this comes from the fact that in many cases the way the currency pairs, the currencies are paired. The base currency is always stronger than the quote currency in this case. So for the best part of the year, you will find that the USD or the euro is stronger than the USD, and that is why going up will be long and going down is short. If you buy GBP USD, you are long on GBP and actually short on USD. I think you're getting me. Another thing, the range and the ranging. This is the difference between the max and minimum value of the period. Ranging means currency rate is fluctuating between a max and a minimum. Okay, so you have to check that. This is how we do not use range and ranging so much, but long and short is there, pips is there. So currency pairs, so when you buy, you are going long. When you are selling, you are going short. Very interesting. Currency pairs. Since Forex market is exchange of one currency for another, every trade involves two currencies. That's why we call them pair, currency pair. Okay, these two make the currency pair. The first currency in such is called base. I introduced this earlier. So this one is base. And the second currency is quote. So we have the base currency. In this case, when we are having a currency like this, a pair like Euro USD. So Euro is the base. Okay, each currency has some symbol such as these ones you can see here. Okay, so I have explained base and quote currency. I'm not repeating that. We have Swiss franc. This is what we call CHF. It took me long to know that CHF is the Swiss franc. Okay, euro, it's abbreviated as euro. Okay, here they are. So this is Swiss franc. Sterling is the pound. Then we have that degree. This is Great Britain pound. Okay, we move forward. Now we are checking the summary. In this case here I prepared a summary. Okay, this summary will cover, you can see that what we have covered already. We have Forex overview, so we have understood what is Forex, what are currency pairs, what are rates. We have defined at least what we will learn in this course or in this industry, what is Forex, and the feedback and everything. Please, as I conclude, know that Forex involves risk, so you have to be careful. Any mistake that you make in the market can cost you a lot of money, especially when you are doing a real account. You have to make sure that you are serious and everything that you do, you know what you're doing. If you do not understand what you are doing or you do not know the repercussion, please do not place a trade. Wait, gather the information, ask around, and when you are satisfied, then you can perform an action on your trading platform. In this course, we will use the demo account, so you will not be required to deposit an amount in your account. So we will continue. So in the next video, you will see a lot on Forex. We are still on the introduction for beginners, and I wish that you are enjoying the section. Let us meet in the next